Happy Monday, everybody. I hope you had a great weekend. As it seems like always these days, another big week. And this past week did not even have a lot of eco data to push things around, just earnings, Fed heads, and geopolitical angst. Today is May 13th, 2024, and this is your Monday market update. Last Monday's the stock rebound continued as stocks gapped higher out of the gate. Nothing major to light the early fire, but markets continue to digest that news from the week before, the jobs data that seemed to change everything. Again, I still don't think it changed much. Only news on the tape was really geopolitics. Middle East seemed to get slightly worse. And then Fed heads Williams and Barkin, nothing about hikes nor cuts, just noise. Not much moved in the dollar or the bond market. Eco data was pretty sparse. Great report by Bloomberg to back up the concern I've been mentioning to you about the supply of debt from the U.S. Treasury that's going to be coming. For the month of March, according to Bloomberg, the U.S. Treasury paid out $89 billion in interest expenses. That's about $2 million per minute. By the end of the day, the Dow was up 0.5%, S&P up a bit over 1%, the NASDAQ was up almost 1.25%. Notable from the weekend, Buffett Fest. If you think he never can lose, Berkshire is estimated by most to have lost $1.5 billion on their investment in Paramount, which they exited, so even the Oracle can have a bad day. On Tuesday, stocks gapped higher again. Eurozone bank earnings and retail sales numbers helped to keep the tone positive. Middle East getting worse, and the Kashkari refused to rule out a rate hike. Market had rose-colored glasses on despite an 8% drop in Disney stock on the open. Earnings and the forecast was not what the market wanted. The Apple iPad event was a bit of a yawner. Market turned lower after lunch. By the end of the day, the Dow was up, still holding its winning streak, up just a bit under 0.1%. S&P up under 0.25%. The NASDAQ was down just a hair. Quick update on earnings season, almost in the books with a few more important ones left. NVIDIA for one, still another week or so. 79% of earnings have beaten expectations. That's in line with history, so nothing exciting. Average surprise, 8%, also in line with history. So what was a bit different was the estimates for the current quarter, the next 4 quarters, and 2025 all increased slightly. Usually this time of year it goes down a bit, about 2%. So weigh that with the economic slowdown story and the rate cut story. Now you see why I'm skeptical. As of Tuesday, markets were watching for the upcoming 3-year, 10-year, and 30-year U.S. Treasury auctions. Recall that the way those go does make a difference. Left to be seen is going into the middle of the week. Wednesday had markets gap lower. A new move, some weak corporate guidance, U.S. semiconductor ban for sales to some Chinese companies, add in some weak export numbers from Taiwan, not much else. Fed heads are still holding higher for longer as the markets are banking on rate cuts later in the year. By the end of the day, the Dow was up 0.5%, still holding its winning streak. S&P flat, and the NASDAQ was down about 0.25%. Again, fun fact. If you're counting on workers back in the office, according to a recent study, only 8% of large U.S. companies with hybrid work setups require their employees in the office on Friday. Long weekend, anybody? Thursday opened little change as markets dealt with Chinese data. That was okay. And the semi-maker arm with disappointing guidance. Another crack in the semi-demand is that demand is insatiable narrative. We'll see how that goes. Jobless claims were soft. And regardless of all that, the market stabilized. Bank of Canada was on the tape warning about high rates weighing on consumers. Not news. Bank of England spoke about sticky inflation. Not news. Stocks went into the upswing again, and the 30-year auction went well. Apple announced they were going to use their own chips for the AI that's coming soon. And just in case you thought that this market was trying to pass off something that's not there, I may have seen it all now. In trying to fool people department, we all know that cute pandas are in China. Well, one of the zoos in China had no pandas, so they just got caught painting dogs to look like pandas. Everything is not always as it seems, so keep that in mind as we see this what goes on in the market. At the end of the day, on Friday Eve, the Dow kept the streak alive and was up over 0.75%. The S&P was up 0.5%, and the NASDAQ was up 0.25%. Stocks did open higher on Friday. University of Michigan survey out and consumer sentiment dropped. Inflation expectations were up. Fed heads are holding the line. Wait and see. But all but the markets seem to see higher for longer. Not so much on the news front, but the Dow closed up 0.33%, making that 8 days in a row. S&P up less than 0.25%, and the NASDAQ was down just a hair for the week. So for the week, not so bad. The Dow was up over 2%, S&P and NASDAQ making it 3 weeks in a row. S&P up over 1.75%, the NASDAQ up almost 1.25%. Markets were set up for the big week ahead this week. Before I preview that, a few things to keep an eye on as we watch for the lack of momentum in growth in the U.S. economy and what it'll do going forward. We've seen some red flags about the consumers, Starbucks, Shopify, and some other retailers. Retail companies underwhelmed this quarter. Also, as I mentioned, we'll need to recall that one of the pillars to this market is that AI excitement and the exuberance with that. There have been some cracks, so we'll have to watch out. All eyes will be watching NVIDIA next week. But this is just a part of the AI economy at this point. Let's preview the week ahead. Okay, this is going to be another important week. Eco data galore. We'll get small business optimism survey. Title sounds loaded, no? Their level of optimism is important. The economy is built on small business, so then we got that. Tuesday, we'll also get producer prices, PPI, followed by Wednesday's CPI or consumer prices. These are two of the closely watched inflation reports. We'll also get retail sales on Wednesday. That's a big one. Then jobless claims on Thursday and leading economic indicators on Friday. Not to be left out, we'll get small but an important group of earnings. Walmart, Home Depot, Applied Materials, and John Deere among the companies reporting. And the Fed heads are back full force. A few of them will be doing commencement addresses. Here's a fun one. Can you recall your commencement speaker? All right, I really want to know this. Send them to me. I'd love to hear, and I'll share them with you in a few weeks. I remember who mine was. But we'll get Jefferson, Mester, Cook, Powell, Kashkari, Bowman, Barr, Harker, Bostic, Waller, Daly, Kugler, and Powell will speak next Sunday for the second time in a week at the GW Law School commencement. Okay, it's a lot of information, the recap, some fun facts, and a preview. Come back on Friday for another planning video and check out the website for a lot of additional resources. Stay in touch and have a great week.